It looked like a good deal. New build, 2-bedroom flat, 5-minute walk from the station. They said it was help to buy approved and future-proofed. So the couple signed, locked in a mortgage for £280,000. Felt like they beat the system, but now their fixed rate deal ends in 8 months. Their lender says the new payments will jump by over £400 per month, and the flat, it's now worth £245,000. They're trapped, no remortgage options, negative equity, and no one wants to buy it off them, not without a massive discount. They're not alone. Right now, millions of homeowners across the UK are on the edge of a housing cliff, and most don't even realise they've already stepped over the ledge, because everything that looked safe just a few years ago is becoming unaffordable, unsellable, or worse, worthless. In 2020 and 2021, the UK handed out cheap money like it was nothing. 2% mortgages, 10% deposits. Buyers thought they were clever, locking in deals for 5 years or more. But here's what most people didn't plan for. What happens after those deals end? Because between now and the end of 2026, more than 2 million households are coming off their fixed rate mortgages. And when they do, they'll be hit with today's rates, which are more than double what they were before. Let's break that down. A £300,000 mortgage at 2%, that's about £1,270 per month. At 6%, it jumps to £1,930 per month. That's a £700 increase every month. That's £8,400 a year. Gone. Just like that. And if you're already maxed out, with kids, car finance, rising bills, and no savings cushion, that kind of change can break you. Now imagine this happening to millions of households at once. It's not just 1 or 2 people struggling to refinance. It's an entire class of buyers suddenly realizing they bought at the worst possible time. But the bigger danger, some can't refinance at all. Not because they don't want to, but because their house is worth less than they paid. They're stuck. And that leads us to something even riskier, the rise of negative equity. And what happens next is brutal. You see, negative equity isn't just some scary financial term banks throw around. It's a real-world trap. And for hundreds of thousands of people in the UK, it's already closing in. Here's how it works. Let's say you bought a flat in 2021 for £350,000. You put down a 10% deposit, £35,000. That left a mortgage of £315,000. Fast forward to 2025, the property's value drops to £310,000, but your outstanding mortgage is still more than that, maybe £312,000. Now you owe more than the home is worth. That's negative equity. You can't sell it without taking a loss. You can't refinance because the loan-to-value ratio is too high, and your only option, stay put and hope prices go back up. But here's the problem. When thousands of people are stuck in this same situation all at once, it paralyzes the entire housing market because they can't move up the ladder, they can't downsize, they can't even sell. And guess what? New buyers are watching this from the sidelines, terrified to jump in and make the same mistake. It creates a freeze. And a frozen housing market isn't stable, it's dangerous. Because if something pushes prices just a little further down, tens of thousands more fall into negative equity. And that snowballs. You get distressed sales, repossession threats, families taking 5-figure losses just to escape. But there's another group who's quietly pulling out early, before things get worse. While homeowners brace for rate shocks, there's another group already heading for the exits, landlords. In 2024 alone, nearly 20% of UK landlords sold at least one property, many of them for good, and they're not being loud about it. There's no big announcement, just quiet listings, empty rental properties quietly added to Rightmove and Zoopla. Why? Because for them, the numbers no longer work. Mortgage rates have doubled, rental income hasn't. Let's say a landlord bought a property in 2018, 2-bedroom flat, bought for £250,000, rented for £1,100 per month. At the time, the mortgage was low, maybe £600 per month. Fast forward to today, the mortgage is now pushing £1,000 per month. Maintenance costs are up, insurance is up, taxes are up, and new regulations like the Renters Reform Bill make it harder to evict tenants, harder to raise rents, and more expensive to comply. For a lot of small-time landlords, it's just not worth the hassle anymore, so they're selling. And here's the kicker, many of them aren't being replaced. In fact, For every 10 landlords who sold in 2024, only 4 bought new properties. That's a massive net loss in rental stock, and it's creating a strange double effect. Rents are rising because supply is shrinking, but house prices are falling because more properties are hitting the market. It's a slow motion flip, and for renters who wanted to buy, the window of opportunity might be shorter than they think, because this exodus is creating new opportunities, but also new risks. There's another trap catching thousands, especially first-time buyers. It's the glittery promise of new builds, shiny kitchens, no previous owners, 5% deposits, free legal fees, even furniture packages thrown in. It looks perfect on the surface, but underneath, a disaster in the making. Most new builds are overpriced by 10% to 15% compared to equivalent homes nearby. Why? Because developers bake in incentives and take advantage of government schemes like Help to Buy. So that flat listed at £400,000 might really be worth only £350,000, and when it comes time to sell, buyers find out fast that no one's willing to pay what they did. Even worse, many are still on those government equity loans, which take a percentage of the sale price, not the original loan amount. That means even if you sell at a loss, you still owe more than you expected. Thousands of these Help to Buy deals are now approaching repayment, and for many owners, it's the moment they realize they weren't buying security, they were renting a lie. This is especially dangerous for people who bought during the 2021-2022 peak, when prices were inflated and money felt free. Now, they're waking up to find their investment is actually a liability. But what if you didn't buy yet? What if you're still renting, trying to decide whether it's worth jumping in? That's where the real trap lies. Rents in the UK are rising faster than ever. In some parts of London, tenants are seeing 20% increases in a single year. A one-bedroom flat that used to cost £1,500 per month now goes for £1,800. And even outside London, in Birmingham, Manchester, Bristol, the story's the same. You might think rising rents would push people to buy instead. But remember, to buy, you need a deposit, you need job security, and you need a mortgage lender willing to say yes. Right now, that's harder than ever, so renters are stuck, paying more, saving less, and watching property prices, even as they fall, remain out of reach. It's a vicious cycle, and it's exactly why some experts are warning of a generation locked out of ownership permanently. But here's the irony. Some renters who waited may actually be in a better position now than first-time buyers who bought too soon. Because as the dust settles, the smart money isn't rushing in, it's watching from the sidelines. It's 2025, but the decisions made in 2020, 2021, and 2022 are just now coming due. And for many of the people who bought back then, especially with low deposits and high borrowing, this is the year of reckoning. By the end of 2026, hundreds of thousands of mortgage deals will expire, and with rates still hovering above 5%, the affordability crunch is real. The question isn't whether some people will regret buying, it's how many will. If prices fall just 5% more and rates stay high, we could see nearly 1 million households in technical negative equity by 2026. That's not a housing market, that's a slow motion crisis. And here's the real danger. Governments don't like big crashes. They'll try to intervene with schemes, with stimulus, with new Help to Buy versions 2.0. But those interventions, they often raise prices even more, trapping new buyers at inflated levels again, right before the next cycle repeats. That's why the regret won't just come from those who bought in 2021. It will come from those who buy too soon now, without understanding what's really happening under the surface. So, what does all this mean for you? Well, the UK housing market isn't crashing like 2008. It's morphing quietly, slowly, but with real consequences. And the biggest mistake people make, thinking property is always safe. No matter the price, the truth, timing matters, numbers matter. And right now, more people are getting trapped than winning. If you're a homeowner, the next few years will test how well you understood your mortgage and your limits. If you're a renter, it's not about jumping in fast, it's about preparing smart. And if you're an investor, you already know this cycle is creating pain, but also rare opportunity, because in every regret-filled market, there's always someone who saw it coming and moved differently. The only question is, which one will you be?